section 194 IB. TDS on rent paid by certain individuals or HUF. Here payee is resident. Payer is individual or HUF. Not liable to tax audit in the immediately preceding financial year. Not liable to tax audit in the immediately preceding financial year. And the payment is rent. If the individual or HUF was liable to tax audit in the immediately preceding financial year, then the obligation to deduct tax at source would have been under 194I, not under IB. Then this payer, this individual or HUF is having TDS obligation. Under 194 IB. When, where the rent for the month is more than 50,000. Rent per month is more than 50,000. Then there is obligation to deduct tax at source. Has TDS obligation. Now let there be TDS obligation. What will be the TDS rate? The TDS rate is 5%. When tax is to be deducted at source, timing of TDS. This section is unique. Tax is to be deducted at source only once in the previous year. Timing of TDS, at the time of payment or credit at the time of payment or credit, whichever is earlier, at the time of payment or credit of rent for the last month of the previous year. At the time of payment or credit of rent for the last month of the previous year. So the tax is deducted at source only once in the previous year, when at the time of payment or credit of rent for the last month of the previous year. Or where in the middle of the previous year, if the tenant vacates, tax shall be deducted at source at the time of payment or credit of rent for the last month of tenancy. If the property is vacated during the previous year, at the time of payment or credit of rent of the last month of the tenancy, if the property is vacated during the previous year, the property is vacated. Next is for deducting tax at source under 194 IB, the payer need not have TAN. PAN is sufficient. For deducting tax at source under 194 IB, the payer need not have TAN. PAN is sufficient. This 5% is subject to 206 AA. No PAN means not 5%, 20%. So the tax deduction is only once in the previous year. It is only once in the previous year, that too in the last month. There is one more point here. Where payee does not have PAN. Payee does not have PAN. The TDS rate is 20% as per 206 AA. Not 5%, but there is one restriction. In such case, TDS under 194 IB at the rate of 20% should not exceed last month rent, because you are going to deduct tax only out of last month rent. Na? It should not cross last month rent. If it is going to cross, we will restrict it to the last month rent. We will restrict this to last month rent if it is crossing. Note number 3. Rent means payment for use of land or building or both under lease, sublease or tenancy or any other agreement or arrangement. Here building and land is only covered. Plant, machinery, equipment, furniture, fittings, for that, for use of that, if you are making any payment, those things don't come under 194 IB. The scope of the rent, the term rent is limited when compared to 194 I. This you need to note. There is one more point here. The time limit for remittance is within 30 days from the end of the month in which, within 30 days from the end of the month in which deduction is made. Time limit for remittance of TDS to the credit of government, it should be within 30 days from the end of the month, from the end of the month in which tax was deducted at source. From the end of the month in which tax was deducted at source. Essence, TDS under 194 IB is only once in the previous year, that too in the last month. That way you need to understand. With this, we are through with section 194 IB. Next is 194J. Section 194J. TDS on fee for professional services, fee for technical services, royalty, etc. Here, number 1, payer is any person payee should be a resident what is paid is the payment is fee for professional services. The payment is fee for professional services. And the amount is crossing 30,000. The amount is crossing 30,000. Then a payer has TDS obligation under 194J at the rate of 10%. Has TDS obligation under 194J at the rate of 10%. Number 2, payer is any person payee is a resident. The payment is fee for technical services and it is crossing 30,000. It is crossing 30,000. then the payer has TDS obligation under 194J at the rate of 10%. Note 1. Where the payee of fee for technical services is engaged in the business of operation of call center, where the payee fee for technical services is engaged in the business of operation of call center, the TDS rate is 2%, not 10%. This is point number 1. Note 2. Payment is fee for professional services or fee for technical services. Payer is individual or HUF. And such individual or HUF was not liable to tax audit, in the immediately preceding financial year. Then in such case, no TDS obligation under 194J there will be no TDS obligation under section 194J. This should be noted. Next is third. Payee is resident payer is any person other than individual or HF. Not being individual or HUF. Not being individual or HUF. And the payment is royalty, it crosses 30,000, then the payer has TDS obligation under 194J at the rate of 10%. Next is payer is any person other than individual or HUF. And the payee is resident. And the payment is non-compete fees, which we already discussed in the basic concepts. Non-compete fees and this is crossing 30,000. Then the payer has TDS obligation under 194J. 194J. Next is payer is any person not being individual or HUF. Payee is resident. The payment is fee for exclusivity of rights. This was also already discussed in basic concepts. What is fee for exclusivity of rights? With example, where the payment is fee for exclusivity of rights, and this is crossing 30,000. Then the payer has TDS obligation under 194J at the rate of 10%. Last in this section, payer is a company payee is director not being employee and who is a resident resident. So payee is director not being employee who is a resident. And the payment is remuneration to such director. Then irrespective of the quantum, irrespective of quantum of the remuneration, the payer has TDS obligation under 194J at the rate of 10%. At the rate of 10%. Timing of TDS. At the time of payment or at the time of credit, whichever is earlier. At the time of payment or at the time of credit, whichever is earlier, this is the timing of TDS. Now we need to know meaning of professional services. Meaning of professional services. There, services rendered in the course of carrying on legal profession, medical profession, architectural profession, profession of accountancy, profession of accountancy. Next is profession of technical consultancy, interior decoration, interior decoration, profession of advertising, any other profession notified, any other profession notified. Services rendered in the course of carrying on legal profession, medical profession, architectural profession, profession of accountancy, technical consultancy, interior decoration, advertising, or any other profession as may be notified. What professions are notified? Professions notified. profession of film artist, profession of company secretary, the profession of information technology, IT, profession of authorized representatives, authorized representatives, umpire, referee, sportsperson, coaches, trainers, team physicians, physiotherapist, event manager, commentators, anchors, sports columnist. These are the professions notified. So even to these persons, if they are resident, payment is made and the payment is crossing the threshold limit, there is an obligation to deduct tax at source. Now, there is one more point you need to note. Film artist is not just the actor or actress. It can cover various persons. Film artist includes actor, cameraman, director, assistant director, music director, art director, dance director, editor, singer, lyrics writer, story writer, dialogue writer, dress designer, these persons are film artists. To them, if you are making payment, that comes within the ambit of 194J. If the other requirements are satisfied, that is TDS obligation. This is film artist. Next is, you need to know meaning of fee for technical services. This is nothing but consideration for provision of managerial or technical or consultancy services. It's consideration for provision of managerial or technical or consultancy services. Royalty means consideration for use of intellectual property rights or information relating thereto. Consideration for use of intellectual property rights or information relating thereto. There, even payments made for acquisition of software is royalty, is to be understood as royalty. When you are making payment for acquisition of software, this is to be treated as royalty. Fee for exclusivity of rights and non-compete fees already explained. Director's remuneration, nothing to explain. Then there are some more points. Third proviso to 194J. What is given there? Where the payer is individual or HUF, where the payer is individual or HUF, the payee is a resident and the payment is either fee for technical services or fee for professional services, whether it is fee for technical services or technical illa, fee for professional services only. Where the payment is fee for professional services, and it is exclusively for personal purposes. Exclusively for personal purposes. Then the payer has no TDS obligation. Has no TDS obligation under 194J, has no TDS obligation under 194J. Example, note, payment made by HUF to advocate for services in connection with partition of HUF. In connection with partition of HUF is an example for payment for personal purposes, is an example for payment for personal purposes. On this, there is no need to deduct tax at source. Or if Mr. X wants divorce from his wife and is consulting advocate, for that is making payment, that shall not be subjected to TDS because it is exclusively for what? Personal purpose. Where fee for professional services are paid exclusively for personal purpose, there is no need to deduct tax at source. Then, note 1. No TDS on GST component. No TDS on GST component. That means when we are rendering professional services or technical services, along with the fees we may be collecting the GST. On that there should not be any TDS. There should not be any TDS. Then there is one more point. Software developer distributor, the end user of the software, end user of the software, the software developer sells software to the distributor. The distributor resells software without any modification. Resell software without any modification. For that, consideration is paid by the end user to the distributor. This is royalty. And distributor pays consideration to the software developer, that is also royalty. What happened? End user in this scenario, end user has no obligation, the end user has no obligation to deduct tax at source under 194J if the following conditions are fulfilled. If payment made by distributor to the software developer payment made by distributor to the software developer was subjected to TDS under 194J or 195. If the software developer is a non-resident, 195. Software developer is a resident, 194J. Distributor gives a declaration to this effect. Distributor gives a declaration to this effect to whom? To the end user. Distributor gives his PAN to the end user. The distributor gives his PAN to the end user. So this is to be noted. Now, the next section for our discussion is section 194M. TDS on certain payments by individual or HUF. TDS on certain payments by individual or HUF. here the payee is a resident payee is a resident. Payer is an individual or HUF. Payer is an individual or HUF. On the payment is sum for carrying out work pursuant to a contract or it is commission or brokerage or it is fee for professional services. Fee for professional services. The aggregate of these things is crossing 50 lakhs. Okay, it exceeds what? 50 lakhs. And this individual or HUF has no TDS obligation. Under 194C or 194H or 194J. In this scenario, the individual has or HUF has TDS obligation. The individual or HUF has TDS obligation under 194M. Has TDS obligation under which section? 194M. There you should know the TDS rate. The TDS rate is 5%. You all know, subject to 206 AA. No PAN 20%. Next is, you should know the timing of TDS. At the time of payment or the time of credit, whichever is earlier. At the time of payment or the time of credit to the account of the payee, the books account of the payer, whichever is earlier. This is regarding the timing of TDS. Note, for deducting tax under 194M. The deductor need not possess tan PAN is sufficient. PAN is sufficient. That way you need to understand. This is section 194M. (194N). TDS on payment of certain amount in cash. TDS on payment of certain amount Now, let us discuss this. Payer is bank or cooperative bank or post office. Bank, cooperative bank or post office. Payee is account holder. Payee is account holder. There is cash withdrawals. On such withdrawal in aggregate, it is crossing 1 crore. During the year, it has crossed 1 crore. The cash withdrawal is from one or more accounts maintained with that bank, etc. One or more accounts. It need not be from one account. One or more accounts maintained with bank, cooperative bank or post office. One or more accounts. Then the payer has TDS obligation under section 194N. That's no TDS obligation. That's TDS obligation, correct. There 2 points are to be understood. One is the TDS is 2% of the aggregate of cash withdrawals minus 1 crore aggregate of cash withdrawals minus 1 crore on that 2% will be the TDS. The timing of TDS is at the time of payment, obviously. At the time of payment. So this is given in section 194N. Now, a very important point is there is exemption from section 194N. Section 194N shall not apply for cash payments to government, for cash payments to bank, cooperative bank, post office, then any business correspondent of a banking company, any white label ATM operator of banking company or cooperative bank. Such other notified persons. To such other notified persons. Government will notify in consultation with RBI such other notified persons. To them, if payment is made, 194I has no relevance. 194I has no relevance. This is section 132. Now 133. Section 1, page number 133. Don't mistake it as section number. Section 195. TDS on payments to foreign company or non-corporate non-resident. TDS on payments to foreign company or non-corporate non-resident. இங்கே payee is foreign company or non-corporate non-resident. Payer is any person. Payer is any person. Payment is any sum chargeable to tax in India. Any sum chargeable to tax under this act. Other than those specifically covered by other sections of chapter 17b, other than those specifically covered by other sections of chapter 17b. For example, TDS on salary paid to non-resident comes under 192, not under 195, because it is specifically covered. Similarly, lottery winnings payable to a non-resident will go to 194b, not under 195, because they are specifically covered by other sections. Any payment chargeable to tax under this act other than those specifically covered by other sections of chapter 17b, this is the payment. Then the payer has TDS obligations under section 195. As TDS obligation under section 195. Okay, so there TDS rate is rates in force. TDS rate is rates in force. You should go to Finance Act first schedule part 2. This is rates in force. Timing of TDS as usual. At the time of payment or at the time of credit to the account of the payee in the books of accounts of the payer, whichever is earlier. At the time of payment or at the time of credit, whichever is earlier. This is regarding the timing of TDS. Timing of TDS. Note, payee is foreign company or non-corporate non-resident. Pay is foreign company or non-corporate, non-resident. And the payer is government or a public financial institution or a public sector bank. Payer is government, public financial institution or a public sector bank. And the payment is interest. Here the payer has TDS obligation under 195 when at the time of payment. At the time of payment. Has TDS obligation only at the time of payment, not at the time of credit. Not at the time of credit. Has TDS obligation only at that time. This is section 195. Next is section 199. Credit for TDS. Credit for the TDS point 1. Payee shall get credit for TDS. Payee, that is the deductee, shall get credit for TDS. Employee shall get credit in respect of tax on non-monetary perquisites. Tax on non-monetary perquisites paid by employer under 192 1A. 192 1A. Where income of minor child is clubbed in the hands of parent, the parent shall get credit in respect of the TDS on such income. The parent shall get credit for the TDS on such income on such income. Point number 4, credit for TDS which is duly remitted to the central government shall be given for the assessment year for which such income is assessable. Such income is assessable. Credit for TDS shall be given for the assessment year for which such income is assessable. That you need to note. So these are all the aspects you should keep in mind in 199, credit for TDS. And if you read my typed notes, you will get absolute clarity. Then 200 time limit we have already discussed it. Section 200 subsection 3 talks about filing quarterly statement of TDS. Caste obligation on the deductor caste obligation on the deductor to file a quarterly statement of TDS to Director General of Income Tax Systems. There is an obligation for the deductor to file what? Quarterly statement of TDS to the Director General of Income Tax Systems. Quarterly statement shall be filed. Now, form of quarterly statement. Statement of TDS. Form of quarterly statement of TDS. There tax deduction is under 192, where the tax deduction is under 193 to 196D. then it should be in form number 24Q. If it is under 193 to 196D, the deductee is resident and ordinarily resident. The deductee is foreign company or a non-corporate non-resident or resident not ordinarily resident. If the deductee is resident and ordinarily resident, it is form 26Q. The deductee is a foreign company or non-corporate non-resident or resident not ordinarily resident. It is form 27Q. This is regarding the form of quarterly statement. Time limit for filing quarterly statement of TDS. Time limit for filing the quarterly statement of TDS. For the quarter ending 30th June 2000, 30th June of the financial year. The time limit for filing quarterly statement is 31st July. For the quarter ending on 30th September, it is 31st October. For the quarter ending on 31st December, it is 31st January. For the quarter ending on 31st March, it is 31st May. This is the time limit for filing the quarterly statement. Only when the deductor files the quarterly statement, credit for the TDS will be available to the deductee. If there is a delay in filing quarterly statement, credit will not be given, credit will be delayed. These are all the points you need to know from section 200. All these things are based on Rule 31A. Now we are going to discuss the last segment of this TDS part. One is TDS violation consequences. TDS violation consequences. TDS violation consequences. These are as under. There, first of all, you need to know about the TDS violations. What are the TDS violations which we are referring to? TDS violations. The TDS violations which we are now contemplating are 3 in number. Short deduction. Instead of deducting tax at source at the rate of 10%, you are deducting tax at source at the rate of 2%. This is a short deduction. Non-deduction. You have not deducted tax at source only. Then there is non-remittance. You have deducted tax, but it is not remitted to the credit of government. It is not remitted to the credit of government. Like this, there are 3 TDS violations. In these cases, there is one more TDS violation. Not discharging the obligation assumed under 192(1)(a). Assumed under 192(1)(a). Not discharging the obligations assumed under 192(1)(a). That means the employer agrees to pay the tax on non-monetary perquisites enjoyed by the employee out of his own funds, but is not doing that. In such case, the deductor or employer becomes assessee in default. Becomes assessee in default. But where note deductor or employer will not be regarded as assessee in default in the following circumstances. The deductor or employer will not be regarded as assessee in default in the following circumstances. When payer had payment as made payment to the payee who may be a resident or non-resident, who may be a resident or non-resident, payment is made. Payment covered by Chapter 17 BTDS chapter. Payment covered by Chapter 17B is made without TDS, on which there is obligation to deduct tax at source, but it is made without TDS. Payment covered by Chapter 17B is made without TDS to the payee. But the payee still payer will not be regarded as assessee in default. Still the payer will not be regarded as assessee in default if payee files return for the relevant assessment year under 139. The payee files the return for the relevant assessment year under 139. Sum received by the payee without TDS was considered in computing the returned income. The income disclosed in the return is called returned income. Sum received by the payee without TDS is included in the returned income. Is included in the returned income. Number 3, tax on returned income. Tax on returned income was fully paid by the payee. This is payee, either by way of advance tax or self-assessment tax. What is self-assessment tax? That is paid in the assessment year before filing return. It was paid by way of advance tax or self-assessment tax. Payer gets a certificate in Form 26A from a chartered accountant to this effect. That means the aforesaid conditions are complied with by the payee. He should get a certificate. Payer gets a certificate in form number 26A from a chartered accountant, to this effect, that these conditions are fulfilled and your certificate should be obtained. In such case, the payer who made the payment without TDS will not be regarded as assessee in default. Will not be regarded as assessee in default. Fine. Consequences of TDS violation. TDS violation. Number one, is disallowance under 40A1 or 40A1A or 40A3. We will discuss, don't worry. Number two is penalty under section 271C. Penalty under 271C. Interest under 201(1)(a). 201(1)(a). So what we are discussing is the consequences for TDS violation. Interest under 201(1)(a). Consequence number 4. Prosecution under 276B. Charge upon all assets. Upon all assets. These are the consequences. We will explain one by one. Now, let us take consequence number 1 for a discussion. Disallowance under 40 class A, subclass 1, subclass 1A, subclass 3. Since we are covering this here, we will not cover in PGBP. There 40A1. What is given in 40A1? Assessee is carrying on business or profession. How to read it? This assessee is carrying on business or profession. The assessee is paying interest or royalty or fee for technical services or any other sum chargeable to tax under this act. Any other sum chargeable to tax under this act. This is payable by the assessee. This is payable. And these are all expenses for the assessee. Deductible under 30 to 38 for the assessee. These are all deductible. The assessee has TDS obligation on these payments. Under Chapter 17B, has TDS obligation under Chapter 17B. These are all expenses on which the assessee has TDS obligation. Assessee is having TDS obligation. Now, these are all payable. Space is not there. Connector. These are payable. These are payable either outside India or these are payable in India to a foreign company or a non-corporate non-resident. If it is payable outside India, we are not bothered about who is going to receive it. But if it is payable in India, it should be to a foreign company or a non-corporate non-resident. Non-corporate non-resident. Situation 1. On the sums aforesaid, no tax was deducted at source. No tax was deducted at source. During the previous year of incurrence, no tax was deducted at source. This is situation 1. Situation 2. Some supra were subjected to TDS but the TDS was not remitted to the credit of government, remitted to the credit of government within the due date for filing return for the assessment year relevant to the previous year of incurrence. The sum supra were subjected to TDS, but the TDS was not remitted to the credit of central government within the due date for filing return for the assessment year relevant to the previous year of incurrence. Relevant to the previous year of incurrence. We'll explain with illustrations, no worry. Okay. These are the situations or circumstances in which we are going to discuss the consequence. In the situation supra, the sum payable supra means above, shall be disallowed in the previous year of incurrence, shall be disallowed in the previous year of incurrence. Disallowed means it should not be allowed as a reduction in the year of incurrence. When tax was not deducted at source, or the deducted tax was not remitted to the credit of government within the due date specified for filing return of income for the assessment year relevant to the previous year of incurrence. Note 1. The sum disallowed in the previous year of incurrence shall be allowed as deduction, shall be allowed as deduction in the previous year of remittance of TDS. The sum disallowed in the previous year of incurrence shall be allowed as a deduction in the previous year of remittance of TDS. This is point number 1. Point number 2. Sum supra is paid without TDS. Some super was paid without TDS. Payee files return under 139 for the relevant previous year. Payee considers the sum received without TDS. Sum received without TDS in computing is returned income. In computing is returned income. Tax on returned income was paid by the payee by way of TDS, by way of advance tax or self-assessment tax. The payer obtains certificate in form number 26A from SEA to this effect. To this effect. In such case, payer is deemed to have deducted tax at source. Payer is deemed to have deducted tax at source and is deemed to have remitted it to the credit of central government. Payer is deemed to have deducted tax at source and to have remitted it to the credit of central government on the date of filing of return. On the date of filing of return by the payee. On the date of filing of return of income by the payee. On the date of filing of return by the payee. Payer is deemed to have deducted tax at source and to have remitted it to the credit of central government on the date of filing of return by the payee. By the payee. அப்படின்னா consequence some disallowed in the hands of sum disallowed in the hands of payer in the previous year of incurrence shall be allowed as deduction in the previous year in which the payee has filed return. Offering it to tax. The sum disallowed in the hands of payer in the previous year of incurrence shall be allowed as a deduction in the previous year in which the payee has filed return offering it to tax. This is section 40, class A, subclass 1. I'll give you an illustration to understand this. See this illustration. X Limited is availing legal services from Mr. X, an advocate, is availing legal services from Mr. X, an advocate, for that X Limited pays fee for professional services rupees 10 lakhs. Date of payment 15th June 2019. Without deducting tax at source under 194J. Mr. X is a non-resident. 194J varakudadu, 195. Because when you are making payment to a foreign company or non-corporate, non-resident, then the TDS rate is given in 195 without deducting tax at source under 195. Correct? So, in this case, what happens? In the previous year, 1920, assessment year 2021, in the hands of X Limited, we are thinking for X Limited, this fee for professional services is expenditure wholly and exclusively incurred for business, and it is deductible under 37(1) of Income Tax Act. It is eligible for deduction. But it is disallowed under 40(a)(1) for non-deduction of tax at source. For non-deduction of tax at source, it is disallowed. But it will be, now I am giving additional information. I am giving additional information. Mr. X, for the previous year 1920, assessment year 2021, filed return under 139 on 1st September 2020, included rupees 10 lakhs fee for professional services in computing is returned income. In computing is returned income. Paid the tax on returned income by way of advance tax or self-assessment tax. Payer X Limited obtains Form 26A from a CA consequence என்ன? X Limited is deemed to have deducted tax at source is deemed to have deducted tax at source and remitted it to the credit of central government on date of filing return 1st September 2020. X Limited is deemed to have deducted TDS and remitted to the credit of central government on 1st September 2020. In the previous year 2021 assessment year 21-22 X Limited gets deduction in respect of fee for professional services being rupees 10 lakhs. In this year it is allowed as a deduction. It is allowed as a deduction. This is a full-fledged illustration to visualize 40A 1A, 40A 1A. Section 150, sorry, page number 150. Wrongly telling this again and again, Mako. Next is 40A 1A. A 1A is similar to 40A 1. However, there are differences we will tell. Assessee is carrying on business or profession. Assessee is carrying on business or profession. Payment is made to a resident. Payment is a sum covered by Chapter 17B. Payment is a sum. The payment is in India. So, sum payable is the sum covered by Chapter 17B, and it is payable to whom? To a resident in India. In this case, this is expense. This is deductible under 30 to 38. The following situations the sum supra %30 of the sum supra, 30% of the sum supra shall be disallowed in the previous year of incurrence. Situation 1, situation 2. Same as in 40A 1. Only one difference here, there 100% is disallowed. Here only 30% of the sum supra is disallowed in the year of incurrence. The circumstances in which it is disallowed is same as in 40A1. Not only that, rest same as 40A1. Rest same as 40A1. Exactly the same. The only difference is what? Here pay is resident, payment is in India, and what we disallow is only 30%. The sum disallowed will be allowed as a reduction in the year of remittance of TDS. The sum disallowed is allowed as deduction in the previous year of remittance of TDS. Remittance of TDS. All exactly same. Next is 40A3. 40A3. Section 40A3. 40A3 salary is payable outside India or salary is payable in India to a non-corporate, non-resident. Salary is payable outside India or in India to a non-corporate, non-resident. It is paid without TDS under 192. It is disallowed under 40A3. It is disallowed under 40A3. So this is the disallowance provisions we are having. Consequence number 1. Consequence number 2. Penalty. Consequence number 2 is what? Penalty. There will be penalty for non-deduction of tax at source. Penalty for short deduction or non-deduction or non-remittance is levied under 271C by the Joint Commissioner. By the Joint Commissioner. Quantum of penalty is the TDS, which is not deducted, which is not deducted. (153) page. Consequence number 3 is interest. Under 201(1)(a), violation short deduction or non-deduction. Non-remittance. Base rate period. Base rate period. The TDS or shortfall in TDS. Here the TDS. This is the base. Here rate is 1% per month or part thereof. Here it is 1.5%. Per month. Period. Due date for deduction to the date of deduction. Deduction of tax at source for this period. From the due date for deduction of tax at source to the date of deduction. When we should have deducted to the date of deduction. From the date of deduction to the date of remittance. To the date of remittance. For this period, interest is levied. Note, sum is paid without TDS. Payee files return includes sum supra in total income pays tax on returned income. Payer obtains Form 26A interest under 201(1)(a) in the hands of payer starts on the due date for deduction of tax and ends on the date of filing of return by the payee. Interest under 201(1)(a) starts on the due date for deduction of tax and it ends on what date? Ends on the date of filing of return by the payee. Interest rate is 1% per month. Base is TDS. This is how we need to compute the interest. Next is consequence number 4. And consequence number 5. Tax was deducted at source. Not remitted to the credit of government. Not credited to the, not remitted to the credit of central government. It shall be a charge on all assets of deductor. Section 201 subsection 2. It shall be a charge on all assets of the deductor. Number 2. Deductor could be punished with rigorous imprisonment minimum 3 months to 7 years with fine. This is as per 276B. The deductor could be punished with rigorous imprisonment minimum 3 months to 7 years depending upon the gravity of the offense with fine. So with this, our discussion on the segment TDS is over. Now we enter into the next segment, which deals with what? TCS. Now I am starting TCS. Provisions relating to TCS. Mainly it is 206C. Similar provisions we are not discussing. You can go through from the typed notes. Exactly same means I will not discuss. There, you know the concept already, I explained it. Straight away we will enter into the section. There takes place sale of alcoholic liquor for human consumption and there takes place sale of scrap or coal, lignite or iron ore, or there takes place the sale of timber, or there takes place the sale of forest produce, or there takes place sale of tendu leaves. बीड़ी लेलर में so there is sale. Sale nale there will be two parties, seller, buyer. Buyer will be the payer, seller will be the payee. Now, from the buyer, the seller collects the consideration. There is payment of consideration. Now the seller has obligation to collect tax at source. Along with the consideration, he should collect tax at source, TCS. Has obligation to collect tax at source. Along with the consideration, he should collect the tax at source. Then he should remit it to the central government. You should remit TCS, sorry, to the credit of central government. And the TCS rate is as under. The TCS rate is for alcoholic liquor 1%. Okay, the scrap 1%, scrap coal, lignite or iron ore 1%, timber 2.5%, forest produce 2.5%, tendu leaves 5%. This is the TCS rate. Where the buyer has PAN. Where buyer has PAN. Where buyer has no PAN, 5%, 5%, 5%, here also 5%, here also 5%, here 10%. Here buyer has no PAN. This will be the TCS rate. At this rate, tax should be collected at source. Tax should be collected at source. Okay. Where the buyer has no PAN, this is done as per (206cc). To consolidate, where there is sale of alcoholic liquor for human consumption, scrap, coal, lignite, iron ore, timber, forest produce, tendu leaves, tax shall be collected at these rates from the buyer and remitted to the credit of government. Along with the consideration, it should be collected, remitted to the credit of government. If the buyer has no PAN at these rates, the tax should be collected at source and remitted to the credit of government. The timing of TCS. Timing of TCS. It is at the time of receipt or the time of debit to the account of the payee in the books of accounts of the payer. At the time of debit to the account of the payer in the books of accounts of the payee, sorry, whichever is earlier. At the time of receipt or the time of debit, whichever is earlier. Debit to what? Debit to the account of the payer, the books of accounts of the payee. To the account of the payer and the books of accounts of the payee. This is the timing of TCS. Note 1. Credit for TCS will be given to the buyer that is the payer, because from him only the money is collected and paid to the government now. So who will get credit, we discussed. Next is you should know who is seller. The term seller includes central government or state government, local authority, central government or state government, local authority, statutory corporation, company, firm, cooperative society, individual or HUF liable to tax audit in the immediately preceding financial year. So that means if the individual was not liable to tax audit in the immediately preceding financial year, he has no obligation to collect tax at source. He has no obligation to collect tax at source. Next is buyer. Buyer excludes public sector companies, excludes central government, excludes state government, excludes embassy, excludes high commission, excludes legation, consulate, trade representation of foreign state, trade representation of foreign state, club, retail customer for personal consumption. If you purchase the aforesaid items for your personal consumption, you are a retail customer. For you, if sale takes place to you, the sale is effected, then the seller has no obligation to collect tax at source. If the sale is to these persons, the seller has no TCS obligation. Then you need to know the meaning of the term scrap. You need to know the meaning of the term scrap. The terms used are being discussed. Scrap. Scrap means scrap from manufacture or mechanical working of materials, mechanical working of materials which is definitely not usable as such because of breakage or cutting up or wear and other reasons, scrap from manufacture or mechanical working of materials which is definitely not usable as such because of breakage, cutting, wear and other reasons. So that you need to note. Note 3. I was telling you, if the buyer has no PAN, then a different TCS rate is given. That is based on provisions of 206 CC. Payer, in our example, buyer has no PAN, permanent account number, then the TCS rate is normal TCS rate into 2 or 5% whichever is higher, or 5% whichever is higher. The normal TCS rate into 2 or 5% whichever is higher. But the point to be noted is this payer should not be a non-resident who doesn't have PE in India. Payer not being a non-resident who doesn't have PE means permanent establishment, PE in India. Not being a non-resident who doesn't have PE in India, for him 206 CC shall not apply. This is 206C, subsection 1. That's the reason why what we did, normal rate is 1%, 1 into 2, 2% or 5%, which is higher 5%. That way we have done. Payer has no PAN, then the TCS rate is normal TCS rate into 2 or 5%, whichever is higher. But if the payer is a non-resident who doesn't have PE in India, 206 CC will not trouble. 161 page. Section 206C subsection 1A. The buyer is a resident. To the seller, he is giving a declaration in writing. Is giving a declaration in writing in duplicate. Two copies given. And it is in form number 27C. And this buyer has PAN. This buyer has a valid PAN and is giving a declaration in writing to the seller. What declaration? Goods Supra are meant to be utilized for the purpose of manufacturing, or processing or production of articles or things are meant to be used for the purpose of generation of power. Goods Supra are meant to be utilized for the purpose of manufacturing or processing or production of any article or thing or generation of power, not for trading purpose. Not for trading purposes. Then the seller has no TCS obligation. The seller has no TCS obligation. Under 206C subsection 1, the seller shall give one copy of the declaration to the commissioner or chief commissioner. This is as per 206C subsection 1B. Should be given to within 7th of succeeding month. Within 7th of succeeding month it should be given. Next is 206C. Subsection 1C. lessor or the licensor to the licensee or lessee grants rights or interest in parking lot or toll plaza, mine, quarry, parking lot, toll plaza, mine, quarry. This is grant under lease license or any other arrangement then the lessor or licensor has TCS obligation at the rate of 2% if PAN is there for the payer, at the rate of 5% if PAN is not there for the payer. But there is no TCS obligation if the licensee or lessee is a public sector company. Not being public sector company. The timing of TCS at the time of receipt or the time of debit, whichever is earlier. At the time of receipt or the time of debit, whichever is earlier. So this is to be noted. There is one more point. Note. Mining and quarrying excludes mining and quarrying of mineral oil this is note 1. That means There is no TCS cover for mining and quarrying of mineral oil. Oil exploration sector is kept outside the TCS cover. Mineral oil includes petroleum and natural gas. Then after a break we will continue the chapter and complete, and we have more to discuss.